Hi, I'm Joel Block, back with another edition of Ask a Syndicator. And this time, the question that we've taken is, what's the difference between a syndication and a fund? And this is a question that comes up all the time. People always want to know, should I set up a syndication or a fund? Can I have both? If I set up one, can I have another? Is one mutually exclusive from another? And so let me straighten that out real quick for you and give you a little bit of background on this. I tend to think of a syndication as a project-based transaction. So you want to buy an apartment building. The apartment building's $1 million. You need to raise $300,000 for the down payment or whatever the number is. You need to tack onto that some amount of rehab and fix-up costs, some amount of working capital so you can carry the property in case there's a deficiency or a problem. You run the deal, you fix the building, you hold it, collect rents, whatever the business plan for the deal is. You sell it at some point in the future, you distribute the money and the profits to the investors, you take your fee, you wash your hands, and the deal is over. That's a project-based syndication, and that's how we think about syndications in general. A fund, on the other hand, is a pool of capital that gives you the ability to strike when you're ready to strike. So, for example, you raise the pool of capital, the money's sitting there, you tell the investors what kinds of things you're going to do with the capital, even though the capital has not been identified for use. The properties haven't been picked out, but you know about what kinds of deals and about what parts of the country you're going to operate in. And so you go ahead and you run that, raise the capital, then you sell the building. You run the business plan for the building, you sell the building, and the capital for the building comes back into the fund. You distribute some of the profits back to the investors, and off you go, and then you use that capital over again. So you're not constantly in a fundraising mode. So what's the difference between the two different kinds of things? Number one, it's much easier to raise a syndication than it is to raise capital for a fund. Why? Because investors just like touching, feeling, seeing, learning about the building that you're going to buy. It gives them a little bit of extra comfort. So raising a fund is harder because they have to trust you more. They have to trust your judgment. Ironically, wealthier people prefer funds because it's a set it and forget it kind of environment, whereas people who are on their way up like to have a little more control in the situation. Not necessarily because they understand anything about why you're doing the deal or really have an appreciation for what the asset really is or can do, but they just feel like they want to be involved. Second, a big difference is with a syndication, you're always chasing capital. So what used to happen when I was in the syndication business years ago, this was in the 80s, we would send a letter to the investor, to the owner of the property. We'd make an offer. We'd say, listen, we want to buy your property. It's $1 million. And they'd say, okay. And we'd say, okay, great. We'll be back in 4 months with the money. And then we'd scramble around town looking for the money. In this economy, that doesn't work anymore. People won't go for the idea of you scrambling around taking 4 months. They want the money pretty fast. The market's different. Everything about it's different. So a fund gives you striking power, and therefore I walk in and say, listen, I'll give you $800,000, but I can give you the money right now, or in 2 weeks after I've looked at the building. And more than likely, I'm going to buy the property cheaper than somebody who syndicates the same property. So funds have a certain advantage. However, the downside to a fund, number one, as I said, it's harder to raise. But number two, you're not scrambling for money like you are as a syndicator. Instead, you're scrambling for deals. So you're always looking for the right deal to put your money into. And sometimes that means people let their guard down and don't do the right kind of deal. Of course, syndicators do the same thing because they get hungry for the commissions that come along with their deals. And they might let their guard down and do the wrong deal too, which is a disaster waiting to happen. But with a fund, you're not scrambling around waiting for waiting for money or waiting for deals. And the reason is because you've got capital that's probably accruing a preferred rate of return, which investors are expecting to be paid. And investors want to be paid because they don't have any control over that capital that's sitting in your pool, because you have control of it, and your job is to optimize the use of the capital. So there's the big differences between syndications and funds. Whichever one you decide that you're going to go after, or whichever you're going to do, entirely up to you. But best of luck. We hope to see you soon in an upcoming syndication hedge fund symposium. Thanks very much, and send your questions in. We're happy to answer them.